Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a beautiful, beautiful Thursday morning. Holy smokes. Summer is really trying to extend itself into mid-September here, and it is a gorgeous day. Okay, just maybe that's the one takeaway from this entire broadcast. It's a beautiful day in the Windy City. Can't speak for Windy, Kansas, though, but we'll ask him. Joining me today, as always, from Wichita, Director of Feed Procurement, Mr. Jake Kingsley, and returning to the Grain Feed from Western and or upstate New York, Senior Dairy Market Advisor, co-host of the Dairy Download, and rotating host of our Parlor to Plate podcast, Miss Kathleen Wolfley. Team, how are we today?
Pretty good.
It's a Bills game day, Jim and Jake, so
Wow.
I'm feeling pretty good.
Feeling pretty good. I think we were talking about before the show, Bills, maybe slight underdogs, but we're feeling good about the Bills. They're going into Miami.
Of course, we're feeling good about the Bills.
Of course we are. We're going into Miami. We're going to stomp those Dolphins.
Yeah,
Right?
squish the fish, if you will.
Oh,
That's fantastic. We're going to squish the fish. You know what?
a little gross.
I don't know if I've never heard that before, but
How have you never heard that? That's like the catch line.
it's the Bears. We don't play fish teams usually, right? I mean, that's fantastic. What about you, Jake? Any fishing squishing?
I hope Josh Allen runs for 1,000 yards and 17 touchdowns because I'm playing Kathleen in fantasy football this week.
Oh,
and
there
I got
you go.
Josh at the top of my roster.
Okay. Wow. So there's a lot happening in just the world, really. And I think we've touched on some of the most important things already.
There's really nothing more important, Jim. So
This is pretty much
we've done it. Sorry, this is a quick podcast.
Especially in Bills country. This is going to be pretty much it. Now we also have WASDE coming out here, and really it's about what, Jake, 35 minutes from now. So this is recording Thursday morning, and maybe we will then ask Paige to kindly timestamp the broadcast. It's Thursday morning, about 10:25 Chicago time, 10:25. So WASDE will be coming out in 35 minutes from now. So as you are viewing or listening to this, WASDE will have been released. And also we will probably have known the results of the fish squish matchup. Bills squishing the fishing, baby. I don't know if I can keep saying that. It's starting to sound a little bit weird. But let's focus on the grain markets here for just a second, because then, Kathleen, we're going to be turning it over to you to talk some dairy, because we do have WASDE. The grain markets are essentially steady this morning. We have December corn futures holding at about 405. That's roughly unchanged. It's up a tick on the day here at the moment. So it is trying to hold $4 as we head into WASDE. March trading at 424. We are, of course, somewhat elevated from the lows of a few weeks ago. So potentially some, repositioning of managed money and or other participants in the market as we move into this WASDE report. And we'll touch on that in a bit. We have Novi beans holding $10. We're right at 10.08, which is up about 8 cents on the day. And then we have December meal. That's stubborn little byproduct. It is holding 320 at the moment. So up just a touch. Also a steady heading into this WASDE report. So we got to keep an eye on that stubborn little byproduct as well. But now that we've covered grain and feed markets, Kathleen, let's take it back to you here for a second, because there's been a lot happening in the milk markets. Holy smokes. We were talking about those charts here before we started recording this morning. I mean, what a move for the milk market. What's been happening there, Kathleen?
We've seen significant appreciation in dairy markets in the last couple of weeks, particularly on the class 3 side. And I think that as we take a step back and think about what's the key driver here in this marketplace, why all of a sudden are we seeing such a big move? I think a lot of it is supply side driven, supply side constraints either today or concerns about supply side constraints going on into the latter part of this year. Certainly, we've been dealing with, it was a fairly hot summer. Milk production wasn't all that stellar. We'd already been down on cow numbers year over year, so that's definitely a constraint as well. And avian influenza, or HPAI, has also been swirling. Most recently found its way into California, and that's definitely creating a little bit more buzz around, oh, holy smokes, what's supply going to look like in California if and when we start to see a spread of avian influenza in that region. Plus, there's always the risk that, oh, maybe there's another state that comes next. So I think that supply concerns are top on the list of worries that are helping to push this marketplace higher. At the same time, we're dealing with European markets that are struggling with something called blue tongue. It's another disease. I would say it's not unlike avian influenza in terms of the impact to milk production. I don't think it's quite as widespread just yet, but we've seen cheese, butter prices in Europe pushing higher, which I think opens up the opportunity for US exports. Certainly our prices have moved higher, but not to the extent that we've seen price appreciation in Europe. So there may be some opportunities from an export front that are helping to keep US markets a little more elevated, despite the fact that on the demand side here in the US, it's okay, not great. There's definitely concerns. Plus, we have some new cheese plants that are expected to get up and running here within the next 90 to 120 days. So I think that some key factors that are driving markets higher today, but definitely some concern that maybe we're getting closer to a top on how much farther we can move.
Okay. And Kathleen, in terms of something that we talk about a lot here, obviously, and we have been, right? I think for a few weeks or even a month or so now, is the margins. Everyone's talking about the margins, right, of milk over feed pricing, because as we know well, feed pricing has been fairly suppressed now for quite some time. Especially we rode really hard into those August lows. Right after that August report, we have rebounded a bit, and Jake will get into that here in a minute. But for the most part, those margins are looking fantastic as feed stays somewhat under pressure and milk continues to escalate. We pulled back here a bit today. But Kathleen, those margins themselves on paper, when just talking about milk over feed, nothing else on the farm at the moment, just on paper, milk over feed, things look pretty darn good, right?
Yeah, exactly. As we go into the fourth quarter with class 3 prices just north of $22.75 range, Q4 class 4 around $22.60. Those are some milk prices that should generate some additional cash flow for producers, at least, again, on paper. I think from my perspective, the big question is, hey, we've got these good margins. At what point do producers start adding more cows, growing milk supply? Producers just don't sit on their hands when margins are good. We grow milk production. But I think given the constraints on heifer numbers, there's definitely a curiosity of how quickly can we really grow milk supply here in the States. Folks would tell you that it's going to take longer than we think, and it always does. But I'm never going to bet against the American dairy farmer, because when there's money on the table, we know how to make milk.
Amen to that. And like we said, we're emphasizing on paper here because we know everyone is also facing additional constraints on their operation. But we make note of this milk overfeed because, as you said, historically that enables a bit more cash flow when you have these margins. But we also know that, interest rates still remain very high. Are we potentially getting a 25, maybe 50 basis point reduction this month? We'll see. But is that super helpful in the near term in terms of taking on an operating line? No, it's not, right? We still have a lot of room to go here to make things a little bit more helpful on farm. But we also like to point out some of those charts where we see the correlation of like class 3 milk pricing versus corn futures, right? That there's often a lag in terms of if corn futures break down, but ultimately we do see milk usually follow. So that's not a guarantee, but we also like to watch those tendencies, those correlations, and we're monitoring the seasonality of the feed markets right now. This is a very natural time of year for them to be under pressure. So we just kind of have to make sure we're also managing our risk on the milk side too then, as pricing is elevated for the time being.
Yeah, Jim, I think that that's a really good point. As we think about, managing the risk on the feed side, it's also important to look at managing risk on the milk side. Yes, milk prices are really strong. We're in a fairly bullish environment today. It's hard not to be bullish given the supply constraints, right? But with that in mind, quarter 4 DRP deadline is coming up September 15th. And there's some really great floor levels net of premium available above $21 a hundredweight. Again, net of premium. So I think that we're in a position today where if producers are looking to add a little bit more coverage or they're totally open, this is a good place to look at managing some risk on the milk side.
Okay, excellent. Thanks for that, Kathleen. And then Jake, we'll turn it over to you then, because, we keep talking about these margins, right? And where feed is sitting. And I think you did an amazing job along with the feed squad here in terms of getting folks bought up appropriately back in August or prior, once we hit those lows. I've had a lot of questions the past week or so about this elevation in feed pricing recently. It's what, Jake? It's a 25-ish cent move on corn, a $20 to $25 move on meal. In the grand scheme of things, you look back over the last 3 years or so, those aren't very big moves. We're still essentially down at 3 to 4 year lows where we sit. But now as we're recording, we've got WASDE out within 30 minutes. There's been a couple other, headlines running through the grain and feed market. So what's been your take on the markets this week?
Yeah, so we're prepping for this WASDE, as you said, and the industry's not expecting any kind of real big shakeup in the numbers from August to September. It doesn't appear, maybe just a little bit of a haircut on corn yield, but I think it can withstand that pretty well without changing up this market a whole lot. And then, we've had this decent little rally in both corn and soybean meal futures over the last couple of weeks. We've been chalking that up primarily to funds trimming up their positions a little bit, getting a little less short as we head into harvest, which isn't unusual, and they were very short those positions. So they've been kind of sneaking out of those as old crop grain has been moving to market here, getting bins ready for the next crop to come in. And now we're just a handful of weeks away from being in our peak harvest time frame there, and we are seeing grain move. And we've been talking about being patient, seeing if we can catch another little breakdown in basis as we get towards October and seeing some of this new crop stuff come in. And it sounds like, of course, the Midwest has been pretty close to where we've wanted them to be for quite a while. Now some of these rail destination markets are starting to feel a little bit of that movement in favor of the feed buyer. Soybean meal is really looking pretty attractive on the basis front, and now you can get a lot of that cleaned up and finish up what you need on the futures side if we catch another break lower there. Corn is starting to give signals. If it hasn't started to work lower in some of these markets, it looks like it should at any moment on basis. And then, of course, futures have been sub $4 on the December contract a few times. We've taken advantage of that. We'll be looking to take another swipe at that if we move down there again. Plenty of opportunity there. Some new opportunities appear to be popping up now. There's some things kind of shifting on the international front that could create a little bit of volatility here as well. And again, volatility can be a good thing. It can produce a little opportunity for us here. So the first one to take a look at would be, we've been talking about how steadily China has been buying canola out of Canada for most of this year. And then over the Labor Day weekend, they came in and said they were going to initiate an anti-dumping investigation into Canada's canola pricing, effectively saying that stuff was being sold so cheap that it was devaluing the products, the crops that were grown in China, making it hard for their farmers to sustain profitability over there. What it probably really is that Canada and some other countries put some tariffs in place on some Chinese products, particularly electric vehicles and some other commodities. And so China's response, which is not a typical international trade, was to come in and put some tariffs on some stuff that Canada's selling, canola being one of those things. There's potential that we'll see some more back and forth on this front, and that may result in China slowing down their purchasing of Canadian canola, which in turn would allow that stuff to flow a little more cost effectively into the US. So we may get an opportunity to finally catch that basis break in canola, especially as we ramp up soybean harvest here in the US with what's expected to be a big yield, healthy number of acres, and some additional crush capacity. And oh, by the way, we're looking at some potential water level issues on the Mississippi River right as we get into harvest, which is going to make it difficult to move our normal amount of product south to the ports in New Orleans and get that product out of here. So again, potentially piling up some and feed commodities in the U.S. to give us an opportunity, at least for a short while, of another little break lower in price. So a couple things to watch there. We've also got to be aware that we're close to planting season in South America. The talk right now is that it's a little bit too dry down there, but it's always a little bit too dry down there ahead of their planting window. They pretty much kind of wait for rain before they get out into the field. So it's too early to be panicking about that, but certainly something to be aware of. And if it drags on for too long, then that'll start to change things for us. But it's kind of what we're watching this week. First things first, we'll see what this WASDE does here in just a few minutes and go from there.
Hey, Jake, if I may, I work with a lot of producers here on the East Coast. You're talking about canola. I know that canola is one of the ingredients that we use quite a bit in this region. Do you think that any sort of reduction in basis would make its way into the East Coast, or do you think that it would be more so the Midwest that could benefit from that, or the Midwest and California?
I think the East Coast could see a break there as well. It may not be quite as extensive as what we see further west because you guys have to run it further along the rail lines to get it there. And of course, there's still a little bit of concern around Canadian rail logistics. They've kicked that can down the road a little further. We don't have the concern that we had a couple of weeks ago, but it's still not completely resolved. And of course, then you've got the issues with the union worker strike at a crush plant up there closer to y'all that has affected the overall protein market. So if they can get that resolved and get production back up and to normal capacities, that would probably help you out as well. So there's a couple things that could push that along for you.
Excellent.
Your turn, Jim.
No, I think that's perfect. Kathleen, that's why, I mean, you bring on a host of a show, the host is going to kick in, man. The host is going to ask questions. That's why you're here. I love it. And we all know you're a better host anyway. You should be in this seat as it is.
I wouldn't be able to do that. Jim. I just don't have the same flair that you do.
Okay. That's very nice. Thank you. I think. I'm not sure. Well, there's a ton going on really in both markets. So it's going to be a really interesting fall as always. But yeah, we've got today's WASDE. We're starting to ramp up harvest here across the Midwest. We've got these situations with the international disputes, issues in South America as they kick into planning, all that good stuff. And then don't forget, Jake, the Fed's going to potentially give us a cut here next week or two. We have an election coming up here in a couple months. There's just a lot happening. So please stay tuned and contact your agents and representatives here at EverAg. I think before we let everybody go, we should probably do a WASDE bold prediction. So to borrow from Kathleen's show, the Dairy Download, we're going to do a bold prediction on WASDE for Jake. Jake, corn yield on the WASDE report coming out in 15 minutes. Bold prediction, corn yield number.
Unchanged. I don't think they're going to change it.
Unchanged.
183.1.
I think that is bold. My bold prediction for corn yield, they're going to lower it by 2 bushels per acre. 2 bushels per acre. And you know what? That's not bullish.
It's not.
It's bold, but it's not bullish. Might get a little pop in the markets after it, just a little pop. But once everyone hears about those yield numbers coming off those combines, bam. Consider it a selling opportunity, Jake, okay?
Already done.
Heard it here. Okay, heard it here first. All right, let's now do a bold prediction for Kathleen. Tonight's game, Bills at Dolphins. We're going to squish some fish. Bold prediction. Bills, Dolphins.
I think you know what my answer is.
Oh, yeah. I think. How bold is your answer, Kathleen?
Go Bills. How's that for a bold?
Very, very bold. Very bold. All caps, bold, underline. You nailed it.
I've got my Bills shirt on.
That's right.
I wore it just for you guys.
That's right. Everybody tuning in from the Northeast. We've got a great representative here of Bills Nation. Bills Nation. We're going to go into Miami tonight, squish some fishies.
I guess I should add a caveat, though. I do not bet on the Bills. I do not make bold predictions on the Bills on the Dairy Download podcast because it's never really worked out well for me. So I've kind of gotten out of that game.
Okay. Understood. Okay. All right. Well, that's duly noted. So we appreciate your just go Bills prediction.
Yeah.
And it does make a little more sense. We appreciate that. Jake, do you want to make a call?
I'm with you. Bills all the way.
Oh, yeah.
This time.
Oh, Okay.
Bring us back when the Bills and the Chiefs play, and maybe we can have a little heartier conversation.
If the biggest concerns in life are Bills versus Dolphins and the WASD, things are looking pretty good. We'll end her on that note. Excellent work today to you both. A huge thanks to Kathleen for joining the show. Kathleen, great to have you as always.
Thanks for having me.
Absolutely. And thank you to Corey and the EverAg Insights crew for their support. And thank you to Paige for production magic. Thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.